Hello and welcome to Close Quarter. Today I'm joined by Shevawn Barder, CEO of AM Specialty Insurance Company, also known as ASIC, which was launched last year. Shevawn, thank you for joining us today.
Thank you, Michael. It's very nice to be here.
Just firstly, why have you launched the company and what does it bring to the E&S market?
We've worked in the E&S market now for many years, serving different segments of the market. We previously operated as a reinsurance MGA, AmRe. As AmRe, we had significant firsthand experience of the fronting space. It's always been an area of focus for us. We also have close links to the Lloyd's market, as this is where Simon and I started our careers. So the E&S space is in our DNA. With the launch of ASIC, and as a result of our many years of experience in the market, we feel that we can bring value to the program market with a hybrid fronter that provides paper, but also has the ability and confidence to retain risk. We feel that it's very important to have the confidence when operating as a hybrid fronter providing paper to retain risk on all programs that we support. In this way, we are true partners to the MGAs we work with and to the reinsurance capacity supporting the program. We have an extremely high level of underwriting expertise that ASIC incorporates into each program written. With our Lloyd's technical underwriting expertise, we look at fronting as more than a credit risk. It's very important to have technical underwriting capability to ensure that programs are run with discipline and according to the underwriting guidelines. This approach helps all parties to the contract and makes sure all interests are aligned for a profitable outcome. Now, more than ever, it's extremely important to sit alongside an MGA when they approach a tight reinsurance market to obtain support on their programs. We feel partnering with us will help them navigate that course.
Well, absolutely. How do you compare the value proposition of ASIC with that of your reinsurance MGU AmRe Syndicate? And will your experience running AmRe Syndicate translate to the specialty company, or are they very different?
I believe experience counts. We built AmRe as a true startup from $0 to $650 million of written premium income in the program space. AmRe was a very large MGA writing a profitable portfolio of low limit, non-nat cat, well-spread US domestic grassroots business. As an MGA that wrote business exclusively on a quota share basis, we were quite unique. We like to think of this as the AmRe model. We wrote a very large portfolio of business that has inherent spread with no nat cat. It created a very effective model for our participating securities to access primary US business. With the launch of ASIC, we've been able to roll AmRe directly into our new company. This has many significant benefits for us. We're already well known in the program market. We have a highly trained team of underwriters, analysts, wording specialists, so we have wasted no time training our staff or building out our company. We have a proprietary database that further supports our underwriting processes, and we've made important strategic management hires to bolster the company that otherwise we are ready to go in the market writing business. At AmRe, we saw many quality programs that we weren't able to be involved with due to lack of appropriate capacity. Working on behalf of foreign reinsurers, we had a very specific remit to write business according to their appetite. So with the launch of ASIC, we now have the ability to set our own course at a time when the market is hard, capacity is tight, and the E&S market is really highly attractive.
Can you tell us what will be the key areas of focus and business lines for ASIC?
Yeah, we are focused on the program space and authorized as a surplus lines carrier and as an accredited reinsurer. Therefore, we can provide paper and retain risk. We're writing all classes of specialty business, which we have very strong expertise in. Our underwriting approach comes from our many years as a reinsurance MGA. We understand the importance of bringing value to the MGAs we partner with and support. We want to work with them to make their business better. It's pretty simple. With ASIC, we will focus on diversified classes of business, specialty business. We've hired Dominic Tassoni and Ann Hoffmans, who have brought their strengths and expertise to our management team. Dominic has many years of experience in the program segment, and he's highly respected. We'll combine our expertise with theirs to enhance our offerings to the specialty market. Therefore, we have a very dynamic team of people that will support our comprehensive approach to the market.
Sure. Well, I don't need to tell you, the E&S market has undergone a significant period of expansion in recent years. What are your predictions for the sector in 2023 and beyond?
Yes, the E&S market has experienced incredible growth. I believe the space will continue to grow and expand as the market continues to evolve. There are a few factors that have contributed to this expansion. I believe COVID was a major contribution to the expansion of the E&S space. As COVID spread and people were forced to work remotely, segments of the market slowed down from an administrative standpoint, but the demand continued to be strong. As E&S insurance is less regulated than the admitted market, E&S filled that demand gap. I also believe that private equity is another factor that's really influencing this space. With private equity providing capital to this segment of the market, it's manifested change that will continue to develop. The role of MGAs has moved forward rapidly and quite significantly. They are now more sophisticated companies writing quality business in diverse segments of the market. This plays to the strengths of the E&S market and allows it to absorb more business and further expand. As MGAs become more sophisticated, they absorb more classes of business from the broader market, and they take this in and control it. I think cyber is a great example of this. I also think now inflation is going to pick up that baton and carry it forward. There are many predictions about inflation. The important feature of inflation is that it is affecting claims costs and rate at a time when capacity is extremely tight. Again, I believe the overspill will tip into the E&S market and it will be more innovative and respond to this demand.
As you enter the market with ASIC, what kind of partners are you looking for?
So as we've been in this market for a long time, and I like to think that we're recognized for our high standards and our ability to work with MGAs to enhance their business offerings. We've always tried to provide value to our business partners by going the extra mile. And that might sound kind of corny, but it's really true. We're passionate about our company and our clients, and we have many great relationships in the market that we will continue to grow and further develop as we create this company. We also want to develop new relationships. As we progress with the rollout of ASIC, we want to engage with a diverse selection of MGAs that we can partner with to bring real value and sustainability to their businesses. Equally, we're looking to engage with the reinsurance community to bring them business that is quality, grassroots, and profitable. The collateralized capacity market is also an area that we would look to expand into, as I feel it's a great fit for program business, which meets their criteria. We can provide value to this segment by being the conduit in the equation. We understand how to structure and run programs effectively and can work with collateralized markets to bring them quality programs with certainty.
Well, Shevawn, thank you so much for joining us today.
Thanks, Michael.